Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing? Why do I only see one? That's because they both on that screen. All right. Now I know. So, if this is the first time tuning in to Tim's Tidbits, please allow me to say welcome. Excuse me. Yeah, hold on, man. Sip. Excuse me. Now, let's try it again. Good evening. If this is the first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Yeah, I'll see it up there. Aranya Grande. That just means big spider if you don't hablo español. And you're in tune to another episode of Facilitation February. We coming to the end, man. It's been a quick month. February went by quick. What we did in Facilitation February, we went back through the Art of Reading Price Action playlist, took a deep dive into the concepts, added a little bit more seasoning onto the concepts that Mike has given us more insight on, anything new that he added since I created that series, and anything I could have just explained a little bit better, right? Explaining my understanding of the ICT concepts. And now we're in the tape reading phase. We started out Monday tape reading. So tonight and tomorrow morning from 9 to 10 is the last 2 tape reading sessions. Without further ado, let's just get into it, man. Shout out to everybody that's in here. If you're in the gang, welcome. If you're not in the gang, welcome. If you're not a part of the gang and you're tuning in on YouTube, do me a favor. Hit a like for the algorithm. And if you ain't subscribed to the channel, what is you doing, man? Hit that subscribe button. Yeah, feel me? Uh-oh. I want that one there so I can see myself. We are looking at the NQ. That's my instrument of choice. You can read tape. You can tape read on any instrument that you want. Let's go ahead. I already updated my daily high and daily low from yesterday. As we see, looking at our daily high and our daily low, you can see that we're down here in a discount of the daily range. Right? If we jump up to the daily chart, we always want to see where are we in price. Okay. So if we squanch up the chart, right, this is the front month. So the price action is a little shoddy back here. If you look at the NQ1 exclamation point, that's the continuous contract on trading view, and you can get like the overall information, and you can see that overall we are in a uptrend overall, right? And we've just been up here at the top, engineering liquidity ever since we made all-time highs back here in October. So ever since October 2025, since we made all-time highs, we pulled back, right? A lot of people know this as the election / tariff drop, because going into the election, and then I want to say the first announcements of some type of tariffs or something. This might have been a tariffs over here, but I think this was like the election tariff something. This was some tariffs or whatever, right? We dropped back. We took out that sell side liquidity. We traded back up. We created relative equal highs, right? We can engineer more liquidity, poked above the high, then we dropped down, created another relative equal low, right? And that low right there is the low that we are looking at as a long-term low, right? What's long-term low? It's an intermediate term low with an intermediate term low, a higher intermediate term low to the left, and a higher intermediate term low to the right. They smile because they're important, right? So we're looking at that as a long-term low. We're looking at this as an intermediate term low. Tim, why do we care? Because when we look at this as an intermediate term low, we anticipate that staying intact until we go and do something important, like taking out these relative equal highs or making all-time new highs or whatever the important business is, up or down. We anticipate that staying intact, right? So with that anticipation, we look at, okay, where are we now in current price? Tim, why do you do this every single night? Because this is the stuff you need to think about every single day. As a matter of fact, let me go to full screen and tell y'all that every single day. Think about this every single day. So we come here and we clickety click, click, click there, and then we drag this back for 20 days, right? 20 days is the look back window that you want to pay attention to for the short term, right? 40 days back, your intermediate term, 60 days back, your long term, right? So we're looking 20 days back for our short term narrative on price. And within that 20 days back, right, you want to put that range into the fourth grade, right? I'm not on the front month, so my stuff is not in here. So we're going to delete that, and I'm going to go back to the front month. All right, now I'm on the front month, and I'm going to redrag this out, clickerson, drag it out 20 days, and we're going to look at the highest high and the lowest low in the 20 days and put it in the fourth grade, meaning put quadrants on it, right? And within that 20-day look back range, right, we're looking for PD arrays that rest at these quadrant levels, which I like to call the bus stops, right? Why are we looking there? Because once this range is made, we're looking for reasons to place trades at these bus stops. Or should I rephrase and say your high probability trade setups are going to appear at these bus stops, right? And so how do we use it? As we look forward in price after, like, we have this high, then we came down and made that low. So right now this is a bearish dealer range that we created, right? We took out buy side liquidity, we took out sell side liquidity. So we're inside of a bearish dealer range, right? And so as we look forward after this dealer range is created, we're watching these quadrant levels to look for trade setups, because we know that our highest activity of trading is going to reside between that upper quadrant and that lower quadrant. So in this range is where we're looking for our highest trade activity to happen. And we're looking at the bus stops for our high probability setups. And what do we look to trade off of? We look back for confluence. So as we're looking back at these quadrant levels inside our 20-day look back, right? We're going to identify PD arrays that we want to see how price reacts to them. And if we look on the lower quadrant, there's a down close candle that we're looking to act as a bearish order block. Again, we repeat, and since it's 3 consecutive down close candles until we offer the opening price on this February 3rd candle, which is 25,876 and a half, this is officially not an order block. But since we've come down to a discount, swept liquidity in a bullish order flow, we're anticipating this to possibly be used as a bullish order block, right? So we're watching that down close candle, right? We have a suspension block in line with the equilibrium. You're watching that suspension block. We have a bearish order block in line with the upper quadrant. You will be watching that bearish order block, right? These are your PD arrays that you're watching. You're gonna see the most sensitivity in price at these PD arrays because they're in line with the bus stops. And as you see, we came down to the lower quadrant inside the bullish order block. We're respecting mean threshold of it. For those who don't know what mean threshold is, we go to the Fibonacci, right? Just show a 50% line, go from the highest high to the lowest low. That's mean threshold of that potential bearish order block. And you can see, right, the bodies are respecting it. We get a little bit below it, but we're on that quadrant level, right? Right there. And get back here, right? And then we go back to respecting it, close back above it, close above it, close above it, close right at it, close above it, close above it, close above it, right? Still respecting the bullish order block down here at the lower quadrant. Now, what do we tend to see with the quadrants? Okay, if price is in a sell program, right, it will stair step down the quadrants, right, to continue the sell, extend the bearish dealing range. If price is bullish, it will stair step up the quadrants, right, to extend the bullish dealing range. Okay, so here we are. Price has traded back up to equilibrium of our bearish dealing range into our imbalance, right? The imbalance in this here is resting right at equilibrium, slight premium, slight discount, but right there. But this suspension block and this bearish breaker have not, it failed to push price down and extend the bearish dealing range. So it's showing respect for this discount PD array. Okay, we still have a sell program as far as the dealing range, but now that we're down here in a discount, right, we've come down into a rejection block right there at our, right, what we're now looking at as our long-term low, right? As we're looking at our long-term low, we've traded into the rejection block. So we've come to an anticipatory reactionary point, and we're starting to respect bullish order flow here. Now, we've traded back above equilibrium, right? Traded back above equilibrium and engage with buy side liquidity. Okay, so we're showing a willingness to want to explore more upside, right? So we showing a willingness to want to explore more upside by trading above that equilibrium. After we came to equilibrium, came back to the lower discount, then we traded above equilibrium, right? And then we pulled back into the order block, and right now we're respecting the order block, right? There's also, right, an inversion fair value gap right there. Once we traded down into the inversion fair value gap, wick down into the order block, then we we opened up here, came down into the order block, and then wicked up and closed respecting the order block. And then now we've opened up today. So you want to watch that daily candle, that wick right there, to see if it offers support, right? Because price is respecting bullish order flow inside of this bearish signal. So I mean, it's bearish order flow here. We're starting to respect bullish order flow, so that's why you're watching that. All right, now keep in mind we're in a sell program, right? And we have come back up to a premium. We have manipulated buy side, right? So if the sell program is still intact, right, you will want to see price start to break down, right, from the height, from this daily time frame. If the sell program is still intact, you will want to see price starting to break down here, because we've spent a lot of time. We have spent a lot of time here engineering liquidity in this discount, and then price has broken out to the upside, right? So now what do you want to watch? How we expanded up, right? And then we immediately came back down and eliminated the opportunity to create a BISI right here. Because when this candle closed, we closed with an opportunity to make a BISI that big. But then we came back with Thursday's trading and eliminated that possibility. So now that we've taken that possibility away, now you're watching this to see if that's going to act as a immediate rebalance. And an immediate rebalance is when price expands with the opportunity to create a fair value gap in the direction that price wants to go. But then the next candle comes back and eliminates that opportunity. And then after that, price get gone up out of there. Right? It's not, you don't want to see it do and hang. If it hang around in here, or if it gets heavy, that's not an immediate rebalance. But if we get on up out of here, then that's an immediate rebalance. And the reason why you want to see it get on up out of there is because the immediate rebalance is, as Michael says, is one of the strongest signatures that you can see in order flow. All right. So now that we understand where we are, we're in a discount on the 20-day look back. We're in a discount on our daily range, right? And we created a bearish daily dealer range. Okay, so with the 20-day look back, it's a bearish range, and we're in a discount, and we're starting to show hints of wanting to respect bullish order flow. From the previous day's session, it's a bearish dealing range, and now let's drop down and see what type of order flow we're respecting. We're going to drop down to 60 minutes first. Let me go ahead and put on a new day opening gap first, if we got one. Let me drop down. Let's look to see if we got a new day opening gap here. Let's find 6 o'clock. 6 o'clock right there. You know, we got a tiny new day opening gap here. For those who don't know what the new day opening gap is, new day opening gap is the difference in the closing price from when the closing price of the futures, which is at 5 p.m., and the opening price, which is at 6 p.m. And then the new week opening gap is the same thing, except it's the closing price on Friday to the opening price for Monday's trading, which is Sunday night. That's your new week and new day opening gap. That's how you find your new week and new day opening gap, 217. So we close there and we open there. We got a very small new day opening gap here. And that's for the 27th. And that's going to be a small bearish new day opening gap. Wait a minute. Did that date not match? Let's see. Yeah, the date didn't match. So this should say the 26th right there. Because the 24th is down there. Yes. All right. Okay. So we got our new day opening gap on there. Now that I got my new day opening gap on there, let's look at a 60-minute time frame real quick. I can hide this 20-day look back. Don't really need to be looking at that right now. I will. Let's find our previous day's dealing range. The lowest low to our highest high. Right, as we can see, we down here in a discount, resting right there. We were right around that lower quadrant for our previous day's range. Okay, don't need this order block here. So looking at our 60-minute time frame, like I say, we're down here in a deep discount on the daily range. Right, overall in price, we have come down. Right, traded up, took out liquidity. Right, broke down, come back down into the order block. Did we touch that inversion fair value gap? I think this might have been an inversion fair value gap we was watching. I'm not sure. Yep, that's the same one. That's the inversion fair value gap we was watching. So we came down into the inversion fair value gap. Yes, a gap there. Right, came down into the inversion fair value gap there. See, we closed this at 43.25. Open our next candle 43, no gap at the bottom. We closed this at 13.25. Open the next candle at 12.70. So there is a gap at the top. We came down, and matter of fact, we was talking about this in the gang. Shout out those who pulled up for the pop up. We talked about this in the gang. If you didn't catch that, it was beautiful. It wasn't recorded. I think it was a great session. I shared this in the Discord here, right there. Nobody cared. Nobody liked it, anything. Said for everyone that was on the pop-up this morning, what do you notice about price in the discount of the first hour's range? Block out the noise and do the work. Hear me. All right. So that's the fair value gap right there that I was talking about right there. And then we're looking at how price reacted in that range right there. All right. Did anyone screen record? I don't think so. What in them was just a couple people in there. Who was let me see who all was in there. I know Jim was in there. I talked to Jim. Was there anybody else in there who's in here? Anybody else besides Jim? Man, there ain't nobody in here.
Yeah, I was there.
Busy. Say what?
I said, yeah, I was there.
Okay, Steve was there. Jim was there. I don't think nobody screen recorded it. But we covered some stuff about not chasing price and letting price tell you what it really wants to do. You know, so if Michael talked about it. I can't remember the date that he talked about it in, but he talked about trading inside the range of the first hourly candle. And he said he was going to go into more detail throughout the year. He gave some detail, but he said he was going to go into deeper detail throughout the year. So we'll see. All right. So we've come down to an anticipatory reactionary point, like I was saying. All right. Price came down. All right. Consolidated. displaced up, breaking market structure, traded back down into a discount, heavy retracement, right? Came back down into the inversion fair value gap, back down into the order block. So we're at an anticipatory reactionary point in the discount, right? Moved back up to the fair value gap that's right there at equilibrium, right? And we move back down to the lower quadrant, but this fair value gap is not pushing us lower right now, right? So we're just down here at the bottom chilling, right? So right now, if you believe in the bearishness, you will want price to set up some structure where you could sell in a premium, right? You don't want to try to sell in a discount based off what price is doing right now, right? Anything in here, you would just be selling in a discount because this is the lowest low and this is the highest high, right? So if you believe in the bearishness, you will want price to give you a reason to be able to sell in a premium of a move. Okay. Right. That's what we got to remember. We got to be patient. All right. So now as far as the buy program that we have set up in the shorter term, we talked about this yesterday. We have set up a buy program. We came down here, made a low, all right, pushed back up, right, broke a high, came back down, respected that low, pushed back up, broke another high. So we have a buy program going on right now. And if we look at price, right, you will be looking at this as a smart money reversal right here, right? And then over here, you can look at this as maybe a low risk buy, and then you can look at this as a first stage accumulation, right? Because it's very sloppy, but we got the smart money reversal. We came back down, right? And then went back up and took that high. So that will be your low risk buy. And then after we took that high, we came back down. So now that we come back down, if we start to move back up above that high, then that will confirm this as being the first stage of accumulation. Y'all know I like to say re on the right, right? So that'll be the right side of the market maker model, smart money reversal, low risk buy, first stage reaccumulation. It's actually first stage accumulation, but I like to say re on the right, so I know I'm on the right side of a market maker buy model. Okay, so that's what we'll be watching for that. If you believe in the bullishness, you always want to understand what invalidates it, what confirms it, yada yada yada. Okay, now that we see where we are in price, we go and going into the Asian time, we have certain things we like to look for. If we don't see those things, if they don't transpire, we just say, hey, I'm probably not going to trade the Asian tonight. All right. And what are those things? What are those things? Right. So we like to see price. Let's go down here and drop down to a 1 minute time frame here. We like to see price. Right. We like to see price. Usually within that first 30-minute window is the optimum time to see it. So let's mark out the first 30-minute window of price, which would be here. All right. This is our first 30-minute window right here. Ignore the BPR in there. All right. Now let's go back down to 1 minute. All right. So that's our first 30-minute window right there, okay? So within our first 30 minutes, right, what do we look for? We want to see price trade away from the opening gap and take out liquidity. Then we want to see price trade back across the opening gap and take out liquidity, right? In this case, we're not doing a lot, but we did it. That's liquidity, right? For me, I would have preferred to see it take out that high right there. Right, I would have seen it preferred because this is the last candle, and then the high that's being made is with the candle that we're starting a new opening with. I would have preferred to see it come here. Like in my mind, I'm like, We ain't sweeping nothing there, right? But technically, it is a swing high. But for me, if we would have come up and taken that high, then I'd have been like, yeah, there we go. All right. But we want to see it trade away from the gap, take liquidity, cross over the gap or the opening price. If you don't have a gap, take liquidity, right? And you want to preferably see it done within that first 30 minutes. It doesn't have to be the first 30 minutes. I give it all the way up until 7 o'clock, but you want to see it happen in that first 30 minutes. And then that will be your initial buy side, right? That'll be your initial buy side liquidity, and then your initial sell side. Okay. And then once that is if that gets established during that time, then you wait until 7 o'clock. And once 7 o'clock hits, then 7 o'clock is when the buy and sell programs kick on, right? That's like your pre-market for the Asian session. Now, the 6 o'clock to 7 o'clock time, I call that your pre-market, but 7 o'clock is like the real pre-market when the algorithms are online now, right? The algorithms are online, and this is when the buy and sell programs start to work, right? So you come over here, you find 7 o'clock, right? That's your 7 o'clock line there. And now this is when your buy and sell programs kick online. All right. And then once your buy and sell programs kick online, then you're watching for price to engage with one of these liquidities. And once price engages with one of those liquidities, and then you're looking for a price to, like, if you already got your bias, right? You say, okay, we have a buy program that we're in overall, and we've pulled back down into a discount, right? So you say, okay, we've pulled back down in a discount, so I'm looking for reasons to buy in a discount, right? So if we open up and we immediately attack the sell side, right, you'll be like, okay, I'm watching to see if this is a Judy swing and I'm looking for reasons to buy in a discount, right? If we immediately attack the buy side, right, you're going to watch to see if it wants to come back and get the sell side before going up, or if it's going to be a continuation pattern. How do you know the difference? One, if we attack the buy side and then we respect this structure here, right, then you can say, okay, it's looking at this as the balanced price range. I'm going to look for a reason to buy in a discount above this structure, right? But if we attack the buy side and then we start slicing through this like hot butter, then you could be like, okay, I'm either going to short down there, or I'm going to wait until it come and engages some sell side before I look for a reason to engage. All right. But like I said here, since we did not trade above that high right there, personally, just me, this would be one of those Asian sessions where I say, hey, I ain't doing that, because it didn't give me the engagement that Michael has taught. These are the optimal trading conditions for the Asian, which is trade away from the gap, take liquidity, cross back over the gap, take liquidity, then after 7 o'clock, wait for it to engage with one of those liquidities, and then you can then choose, do I want to, if it engaged with the buy side first, do I want to short back down, maybe toward the new day opening gap, or back toward the opening range sell side? Or if it engages the sell side, now looking for a reason to get long and trade up. All right, but let's look at what we got going on now. 7 o'clock time frame came in, we traded back up to our new day opening gap, right, which is an anticipatory reactionary point. Once we hit that, now we're trading back down toward the sell side. Now we have our high, we have our low, we got internal sell side right here. At 7 o'clock, we created relative equal lows, and then we blast up to the anticipatory reactionary point. Now, what are we watching for at this point in time? Okay, in the short term, price is in a sell program, but this sell program is, like we said, is in the midst of a higher time frame buy program. So now, what are we watching here? When we coming from this anticipatory reactionary point and we're trading back down, we got internal liquidity right here, right? So we're watching price at this we just took that internal liquidity. So we just took the internal liquidity there, right? And then we got sell side down there. Now, 7 o'clock, we took off, come down. Right now, we have a bearish Judas swing going after 7 o'clock. Okay, the bearish Judas swing, it aligns with the short-term sell program, right? It's opposite of the higher time frame buy program that we're in. Okay, it's opposite of the higher time frame buy program. We're in a deep discount of yesterday's bearish dealing range. So, right, personally, you don't want to be shorting in a discount. So now, if this bearish Judas swing is going to be the move, if price is truly bearish, right, like I said, you want to let price establish a new dealing range to give you, extend this dealing range, right, and give you opportunity to sell in a discount. Let it establish structure. Okay, since we're in a discount, you're being mindful of, is this going to be a wig snatcher? Meaning, at 7 o'clock, we open up, trade up to the anticipatory reactionary point, which is today's new day opening gap, come down, sweep internal liquidity, maybe even sweep the opening range liquidity, and then come back up. That would be a wig snatcher. Buy side, sell side, and then continue back up. All right. And since you're in a discount, I will prefer it to give me some type of reason to buy, because we're in a deep discount on the daily range. Okay, we're in a deep discount on the daily range, and based off the daily range, right, we came down. Once we hit the anticipatory reactionary point, we traded back up, came back down, left the low, right, took out that high there, took out that high there, consolidated, traded back down, right? So far, we've left the low, right? So right now, we're showing signs of wanting to respect bullish order flow, and we're hovering around this lower quadrant, right? We still have not come back into a premium on the daily range yet, right? Only thing we've done is move inside this lower quadrant in this deep discount, right? The only place that would be feasible for me to be looking for a reason to short would be above 25,138.50, right? If I was bearish, because that would give me fair value into a premium. All right. If it wants to continue to be bearish down here, I would just watch it. All right. So here we go. We're at that internal liquidity now. We've gotten to that internal liquidity. Again, like I said, this would be one of those days since we dropped down, since we crossed back over, but since we didn't take out a substantial liquidity, in my opinion, only thing we did was trade back up into this fair value gap. Right, we just retraced back up to the fair value gap and pulled back down, right? So when we look at price overall, right, this right here, right, that right there, that's that dealing range that we in, that latest dealing range that we in the short term, right? We came down, right, traded back up into a premium, into a fair value gap. That's the first imbalance created as we left that area right there, traded up into that fair value gap. Looked like we might have got into that inversion fair value gap there, right? Traded into that this mitigation block, this breaker, right, up into that area right there. All right, and then came back down, but this failed to push us outside of the low, right? That's why I say right now we're seeming to respect bullish order flow. Doesn't mean that we can't continue down, but right now this right here has failed to do its job, because its job is to send us lower and extend this bearish dealing range. But we came down to the order block, right, and then start to make our way back up, and then now we're dropping down, right, and we're engaging that liquidity. And now that we've set up, right, a new range, okay, we've created relative equal highs, and then now we're at here at this low, right? So now you want to see price attack this, and if price is bullish, this would be attacking the sell side. Once the buy program start, right, we engineer buy side liquidity, we attack the sell side, and then you would want to see, like, just say a breaking structure here, right, and then price start being supported to go back to the opposite side of the range. Okay, but for right now, we have a bearish Judas swing, right? We got a bearish Judas swing right here. All right, let's look at the, what time is it? 7:44. Let's look at the 15-minute and the 5-minute time frame, so we can get a little bit more clarity. Okay, so looking at our 15-minute, we're inside this 130 BSI right here. Right, we're still inside that 130 BSI that's on the 15-minute time frame, and on the 5-minute time frame, there's also a 130 BSI right there. All right, so we got a 130 BSI on the 5-minute and the 15-minute time frame. Closed that at 74.75, opened that at 75.25, so we got a gap there. So we got, we'll mark out the 5-minute here. Got a gap here, down to there. All right, that's that 5-minute BSI that we're inside. We got a 15-minute BSI in the same spot. Okay. So now, looking for this to support price, right? We also have a propulsion block down here just below the BSI, right? So these are your defenses. You got your last imbalance, your first imbalance really, but your last imbalance as we're coming down. Your last imbalance there. You have your order block here, and you got a propulsion block there. So for your order block, right, mean threshold, like on this 5-minute time frame, right, mean threshold of your order block is 24,919 3/4. That's right there at the round the close of the propulsion block, right? So on a 5-minute basis, right, for the bullish narrative, since we've come up and we seem to respect bullish order flow, for the bullish narrative on a 5-minute basis, right, 24,919 is 3/4 is kind of like the last line of defense for body closures, right? Last line of defense for body closures for this short-term bullishness right here. We've come down, look like we tapped that low. Did we get that low? 54 3/4, and that low is 55, right? So we went one tick below that low. Right, one tick below that low, got a pretty nice reaction off of it. Really nice reaction off of that. Getting ready to go into, we got 3 minutes away from the macro time. We didn't take out that high. Right, we didn't take out the high, but we got a really nice reaction off of that sell side. Didn't touch that 1-minute fair value gap either. There is a 1-minute fair value gap down there. Would have been nice. Wait a minute, maybe we have. Did we get a? Let's look and see if we got a gap there. So we close this, close this at 54 and a quarter, open this up 54.50. So there is a volume imbalance there, no volume imbalance there, and we did not touch it. Right, so we did not touch the 1 minute fair value gap, but we did touch the liquidity. We did tap into the liquidity about 1 tick. God dog it, hit the wrong thing. All right, so we took out the high, we got a fair value gap, and we got an inversion fair value gap there. Going into the macro time, we've tapped that liquidity, right? Got a nice reaction off of it. So now, right, now that we got a nice reaction off of it, now you want to see this firm up for the bullish narrative, right? We come down there to that liquidity like we said. We after 7, we've come down and engaged the the opening range liquidity. All right, so now we're getting a nice reaction off that liquidity. We did not trade back into the inversion fair value gap right here, and now we've traded up into this SIBI here, and then now we're trading back up in it again. So now for the bullish narrative, you want to see this become an inversion. All right, you want to see this become an inversion right here. All right, we've closed above consequent encroachment. Right, we're inside the macro time. Right, so you don't want to see a lot of dilly-dallying now. You want to see price start to spool. Right, you want to see it start to spool. Now we've come back up into the imbalance. Right, we traded into the imbalance here, wicked off of it, closed above consequent encroachment there. Right, so now you want to see price start to like spool. We didn't come back to the inversion. We didn't come back to the breakaway gap right here. So now you want to see this little area here be used as a bullish breaker. This candle here go up, down, up. You want to see that area be used as a bullish breaker. Right, if we do come back down to it, right, you want to see it be used as a bullish breaker. Trying to see if we may get an immediate rebalance if we trade back into the high of this 740, which we didn't. So we got a small fair value gap right there. Right, want to see if price wants to touch it or just leave it alone. Right, and like I said, we would overlap that, and then the next candle you want to see it get out of there. That's what an immediate rebalance looks like. Right, so right now we're getting a little bit of movement, no bottom wick on this candle. Right, price is steady moving toward the highs. All right, like I said, we still haven't gotten that inversion. Right, pay attention that we're trading up into a fair value gap here. Right, but since we're getting this reaction off this low during the macro time, we want to just see price push right on through that. Right, we don't want to see price stall here. Right, we're refusing to come back down to the imbalances that we're creating. Right, volume imbalance never came back down. Fair value gap never came back down. Inversion never came back down. Volume imbalance never came back down. Fair value gap never came back down. Right, now we haven't, the actual fair value gap we closed above, but the entire imbalance we haven't yet. Right, because the volume imbalance on the top of it. Right, and then now we're pushing through this fair value gap right there. We just touched that bearish order block up here. We slapped through this bearish order block, but that one there, so we're disrespecting PD rates. Right, if we look here, right, if we get a closure above this, right, if this candle closes above that, we're disrespecting that bearish order block. Got 15 seconds left on that candle. Right, if we get a closure above there, then both of these, right, this was already an inversion, we traded right back down. Right, but right now it's not acting as a reclaimed. Right, it's not acting as a closure above, didn't become a reclaim, created an inversion, disrespected the bullish order block. Right, so now you're looking at this inversion to support price. We got an order block there. We got an inversion fair value gap here, right? What time is it? 7:53. Let's look at our 5-minute candles real quick. All right, for the 5-minute candles here, we created inversion fair value gap right there on the 5-minute candle. So that 7:35 candle came up, closed above. Not quite, because the entire imbalance above the fair value gap, yes, we did close above it. But the entire imbalance, we haven't closed above the entire imbalance yet. Just yet, because the entire imbalance would take us up to mean threshold of that lower time frame. Where is it? Yeah, right here, that lower time frame. What are we looking at over there? Why did I run that? That was like it was a order block. It was an order block on a lower time frame. All right, it was an order block on a lower time frame. All right. And so now we gotta, if this candle closes like it is, we'll have a balanced price range here because we have a BISI there and a SIBI there. All right. $15-minute. All right, traded back up to the bearish order block. All right. Let's see if this lower time frame can hold. All right, we're back down into the inversion fair value gap now. Back down into the bullish order block. All right. Paying attention to the 5-minute time frame and the 15-minute, right? The 5-minute has a balanced price range down here, right? A BISI there that we can trade back down into. If I mark out that little balanced price range. Oh, I hit the wrong thing. God dog it too. Let me just do it here. Balanced price range right there. Then the BISI, that's the BISI, that's the size of the BISI there, right? Came down close to it, didn't touch it yet, right? That's the BISI there, that's the balanced price range there. All right, so we just touched into the BISI right there. 5-minute BISI, we touched into it. Balanced price range is there. And that's a small 1-minute BISI there also. That's the 5-minute balanced price range. And then the area we say 1-minute breaker, right? Watching that, see if it wants to support price on the 15-minute time frame, right? Come down and we kiss that low, trade it back up into a bearish order block, right? So now we are up against a 15-minute bearish order block, okay? And we traded back up into a 5-minute bearish order block. So now this 15-minute and 5-minute bearish order block, their job is to push price back down below that low. All right. So now we know on the lower time frame, okay, this bullish price action that we've been seeing off of this low, right? We got a bullish breaking market structure on the 1-minute. We're respecting bullish order flow, trap traders there. Right, we've come back down to the balanced price range. So now if this starts to fail, right, this little pop is not invalidated until we hit that low, right? We can come all the way back down, right, into That lowest candle, this is your order block here, right? This is like your last line of defense. These last 2 down close candles, that's your last line of defense for this little mini buy program that we've started on the 1 minute time frame. Okay, so now you're watching all of these PD arrays that's designed to support price to see if they're failing on their respective time frames. Okay, we got the reaction off of there. Nice little pop. Failed to come back down. Right, got up here, created relative equal highs again, pulled back down into the range. Let's see how far we went down. High is high, low is low, right? Didn't come back down to a discount of the entire range, right? Look at the range as far as trap traders, right? Come up to when we start to leave the range here, started to break out, like right there, breaking out of the range. We came back down into a discount, into the discount fair value gap, into the balanced price range, and now we're just watching to see if price engages this high, right? Then what are we doing? We're extending the buy program, right? Because right now that's our dealing range that we're in, leaving the balanced price range. That's your latest expansion. Come there, we've moved up, right? So inside this little range there, we've come back up to a premium into the imbalance, right? Just for this little range here, this volume imbalance should push price down, right? If it doesn't push price down and we go back up, then we've extended this small buy program, right? And remember, we're up against, and on the 5 minute time frame, we see here 5 minute has pulled back down into the 5 minute fair value gap, right? And it's acting as support. Look like we might have just, did we poke that high? I don't know, but the 5 minute time frame, we expanded up, pulled back into the 5 minute fair value gap in the balanced price range. Then we pushed up, right? Don't look like we took the high. On the 1 minute time frame, we're at 8 o'clock. 8 o'clock, we popped up. So now we're going into the open of the Asian, going into a new hour, right? We popped up. Don't look like we what's the high on this? 96.25. The high on this, not so we came up here, made an equal high. So we coming into the 8 o'clock hour, pop straight up, made an equal high. All right. So now what are we watching? Are we going to go up, get a bearish Judy swing, and then tank, right? Or are we going to continue to respect this and move up? Right, we already know what's going on in the higher time frame. We know what's going on in the lower time frame, and now we're just watching and waiting to see what happens. We just took out that high, so we've extended the bullish dealing range. So we've extended the bullish dealing range. Now we've taken that high, moving into the 8 o'clock hour. So now you want to see if 8 o'clock will continue to be supported by this little dealing range here, or will we get a bearish Judas swing, right? Again, for anybody that be asking, well, Tim, how do I trade this stuff? You're seeing what you traded by measurable risk. You go in and say, okay, price has done this on my higher time frame. Now I'm on my lower time frame, and I'm looking for a reason to buy. I'm looking for a reason to sell, right? Looking at our 15-minute time frame, hasn't really given us anything to do. Looking at it on our 5 minute time frame, the 5 minute came down, touched the anticipatory reactionary point, tapped the liquidity, came up, created a fair value gap in a balanced price range. If you believe in that, right? That retracement back to that fair value gap, that's a buying opportunity with measurable risk, right? You got measurable risk that you can look for, right? If that, right? And I'm here, you say I'm looking for a basic 2-to-1, whatever, right? Measurable risk, that's right back at the high on the other end, right? Measurable risk, okay? So a pretty big stop, 27.5 points, but give you measurable risk based off the 5 minute time frame. If you trust the 5-minute time frame. Now that we've come back down and shown support of that, then you can say, okay, now I want to look for a reason to buy in here. So I'm buying off this fair value gap right there, right? Because now I believe that. So I'm buying off this fair value gap here, and that'll be my measurable risk. If you believe in the sell side, right? Nothing has set up for like any selling thing, because we wanted to create structure to give us a reason to sell, because we're in a discount. So no structure has been created to give me any reason to want to sell, because we're still in a discount. We still haven't formed any new structure that we've established and broken outside of. All right. It's 8:04. 8:04. Do anybody have anything for me? You say you didn't get your notification? Well, turn them on. Who's still up in here? Who's still up in here? Speaking of up in here, shout out my homegirl Rhonda Green, man. My homegirl Rhonda Green be writing books, y'all. She be writing books. Take breathing over. She be writing books. This is one of her books that she wrote right here. I was looking on her page, rundagreen.com. I saw at least 2 other books on there. I bought 2 of them. She said I bought one a long time ago. I don't remember that. But this book here, and then Before the Butterflies. Right, ladies. There's some good information in here from what I'm told. I didn't read the books. I didn't read the books, but from what I told, some good information on dating. You know what I'm saying? The before you get caught up in the feelings and stuff like that. Right? As my uncles and my aunties and my parents used to tell me when I was a little boy, before you start thinking with the wrong head, go to rundagreen.com and support my sister, man. If y'all ain't got nothing else for me, man, we gonna call it done. If y'all ain't got nothing else for me, we gonna call it done. I'm fun to go. Well, I've been watching this show called what's up, Felicia? I see we got Felicia in here. Liquidity 4X, you still in here? Will, what's up, Will? Will, you still in here? See, Will said something earlier. Will still in here. We get some little pops and stuff off of them levels, but it ain't doing nothing. It ain't shaking nothing. Look at there. All right, remember that right there, the little fair value gap I told you about right there. We gotta have a little pop off of that, but it ain't shaking nothing. You know what I'm saying? It ain't shaking nothing. So from the fair value gap, we did come down to it right there. And it popped up, look, 11 points. It ain't shaking nothing, you know what I'm saying? From the 5-minute, coming down into that 5-minute fair value gap. That 5-minute fair value gap from the, see the high. That pop, that's nice. 18, it popped up like over 18 points, almost 19 points. That's a pretty nice move for the Asian session on the NQ. You know what I'm saying? That's a nice little move, but it ain't really, you know what I'm saying? But it's the Asian, you know, it ain't really shaking now. Back at that lower quadrant right there. So back at that lower quadrant again, up against the higher time frame bearish PD arrays, right? So you're looking for price, right? If the bearish PD array is gonna prevail, right, you'll want to start seeing this lower time frame stuff fail, right? But this little pop here is not invalidated until you take that new low. That's just the nature of the beast. That's the nature of the beast. Those are the invalidation points. I can't, you know what I'm saying? I'm sorry, right? I'm sorry, that's what it is. You be like, well, Tim, it can chop, but yes, it can. It can chop back and forth. If it's a high resistance liquidity run, what are we anticipating to do? Coming all the way back down to that order block, right? So if it comes all the way back down to the order block, no matter how far it expands up, you should understand that this is the invalidation point. If it can come all the way back down to this order block and still go up, that means the move wasn't invalidated. What invalidates the move? By extending bearish range. Hey, it's free advice from me to you. Take it or leave it. Take it or leave it. All right, man. Ain't nobody saying nothing. I'm quite tired of talking. The final tape read. Do me a favor, man. See what it says on the bottom of the screen? Press like. Press like for the algorithm. Hit the like button for the algorithm. If you're not subscribed to the channel, do me a favor and press subscribe. All right. If you want to be a part of the gang, it's a link in the description below. The second link in the description below is $50 a month. All right. You come hang out with us. We do monthly Q&As on the gang. What is the first Wednesday? Is the first Wednesday or the second one? Which Wednesday is it? I mean Sunday. Is the first Sunday we do the Q&As? I think we do the Q&As on the first Sunday. We do pre-market analysis every Monday. We do tape reading every Wednesday. We do pre-market analysis every Friday. And then the Q&As are on the first Sunday, I think. The first Sunday of every month we do Q&As. And then I just be doing random pop-up sessions. I just be popping up randomly. Like I did a pop-up today. It was only a couple people in there. I did a pop-up. I just be doing random pop-ups whenever I feel like running my mouth. Hit Learn and Share said this was a great February. Who agrees with Hit Learn and Share? Do y'all agree with Hit Learn and Share? If you think this was a great February, hit a like for the algorithm and drop a 1 in the chat. If you think this was beneficial to you. Yeah, if this Facilitation February was beneficial to you, drop a 1 in the chat. And if you in the gang, right? If you feel like it was beneficial to you, right? I want you to unmute and tell me what you gleaned, what you feel was the most beneficial. What do you feel was the most beneficial? What do you feel was the most beneficial? I'm gonna try it, y'all.
For me, it was again the emphasis on paying attention once again to order flow, and then that reiteration of once we leave like a consolidation and leave that order block, then reiterating that is that dealing range to utilize. It's just like the reinforcement of concepts that you think you have, and then it's come back and it's like, okay. So it was a reiteration of some of those, I say, smaller things that you forget when you like in the middle of, analyzing prices, remembering that. Because I think I had a question saying, oh, it should come back here, but you were like, remember, we didn't really displace past that point. Because I was like, oh, we inverted it, but we inverted, but never really displaced. So it was perfectly acceptable for it to have a deeper retracement. So those kind of things.
Okay, that's what's up. That's what I'm trying it, y'all. I put the link in the YouTube. If anybody that's on YouTube want to click on there, share their thoughts or ask a question, the link is in there. Now, if we get a crank yanker that pop up, I'm just going to end the live and delete the video forever. Because I ain't trimming no crank yankers out. If a crank yanker pop up, I'm just going to end the live immediately and delete the video forever. So the link is pinned to the top of the chat. I'll sit here for about 3 more minutes to see if anybody click on it and want to pull up and ask a question or share their thoughts. If not, we just going to end it. And tomorrow morning at 9, We're going to do the final tape reading session tomorrow morning at 9. Appreciate you for sharing, Yolanda. Appreciate you for sharing your thoughts on this February. Anybody else want to share their thoughts on what we did this February? Or is there anybody with anything they would like to put on the table or ask? Or anything that I could have done better for the facilitation February, outside of the fact that we started late because my new setup took longer than expected.
I think the reinforcement, like Yolanda was saying, I think it was the reinforcement, Tim. I had never gone back through those videos, but when we did it this month, I could distinctly remember where my headspace was when I was looking at it for the first time, and now
is that me talking in the background? I hear somebody talking.
Oh yeah, hold on, man. I got 2 calls going. Hold on. I got it. All right, here we go.
Joe moonlighting on us. Joe at the same time.
No, it's another call, man, about another project. But I can see kind of where, because at some point I had gotten discouraged, but I can see now how I'm much further along than I was, even though I ain't where I want to be, much further along than when I started. And so that is confirmation to me that what I'm doing is paying off. And so I appreciate what we've done over the past few weeks.
All right, that's what's up, man. That's what's up. It's always good to be able to look at your own development with clear glasses and say, okay, I see what I need to work on. I see where I have improved. You know what I'm saying? And it's always a good feeling to see improvement in yourself. Always a good feeling to see improvement in yourself. So congratulations on recognizing the improvement, and congratulations on recognizing where you need to put in a little bit more work. And hey, like you say, you was like, hey, I wasn't going back through looking at this stuff. You know what I'm saying? And we all do that. We all, like I always say, do the work. You know what I'm saying? I'll be like, do the work. We all have great intentions on going back and doing the work, but life start lifing, man. We have jobs, we got families, we got other commitments. You know what I'm saying? And the easiest thing to do is shortchange yourself. Meaning, I know I want to get better at this, but I've given 8 hours to my job. I've given all the extra time after work to my wife and my kids. You know what I'm saying? We've done the extracurricular. Man, I just need about 15 minutes of rest. Alarm going off. It's time to go to work the next morning. You know what I'm saying? It's easy to neglect ourselves, but that's why I always tell y'all, man. I be like, man, y'all give it up for y'allself for putting in this work, man. It ain't easy just to be, you know what I'm saying, sticking to this. I might be getting on here and walking you through it, and y'all be like, oh man, I'm so grateful for you spending your time. Man, salute y'all. You know what I'm saying? And the only reason why I be doing this is because this is what I wish I had when I was learning this, man. I wish I had somebody who was willing to just spend the time and sit there and break it down to me in a way that they understand it, and then try to help explain it in a way that I can get it. You know what I'm saying? That's why I always be like, man, y'all ask your question. Ask your question. Absolutely, because I wasn't there for the original artistry. Okay, that's what's up. Steve said it was really helpful because he wasn't here for when I originally dropped it. Right? And yeah, that's true. Like for people who weren't around when I originally dropped it, you don't know to go back and look at that video series. You know what I'm saying? You don't know what that video series was. And I got a whole heap of videos on my channel. So where do I start? Where do I go? You know what I'm saying? That's another reason why I did it, because even people in the gang don't have time to go back and, you know what I'm saying? I'm talking about true blue gang members. You know what I'm saying? Y'all already know true blue gang, like he'll learn and share, been here from day one. Like my dad knew me say, this mice boom coon, been here from day one. But life be lifing. Life be lifing, and she don't have the time to just you know what I'm saying, sit down and put in the work like that. Because life be lifing. I ain't trying to, you know what I'm saying. I'll be putting people on the spot. I'm sorry here to learn the show. I'll be putting people on the spot. Don't stop. Don't, you know what I'm saying. Don't sick the prayer warriors up. Larry Shack gonna be on the back pew with the fan. That dog gonna Tim put me on the spot again. Hey man, I said we're gonna call it right there, man. Tomorrow morning at night. Look at this stupid price. I just looked over at the chart. Look at this stupid price. Look what this price doing. Look here, man. Look at that. We came back down again, right? We came back down again, and then we took off, right? Got back up there above this fair value gap, right there, like we was gonna run off on the plug. Stopped on brakes and pulled all the way back, right? This is that kind of price action that I'd be like, I'm Gucci. I'm Gucci. Classic high resistance. Classic high resistance. Right? But again, if you are in trades or, you know what I'm saying, I don't want to say stuck in a trade. If you are in a trade like this right here, just know your invalidation points. Right? Know your invalidation points when it comes to, am I on the wrong side of it? Understand your invalidation points. Right? Know where price shouldn't go back through. Okay, looking at this 5-minute time frame right here. Right? If price really wants to push up, right, we need to be respecting this down close candle right here at 805. Right? Right there. We need to be respecting that down close candle right there at 805. Right? You always want to understand your invalidation points. Okay. This right here was a 1 minute fair value gap. Let's look at what that 1 minute fair value gap is. That right there, that's an important 1 minute fair value gap. Right? Why is that? Because that's the first imbalance that was created when we came down. Now that we're back above it, right? We come here, we create it, trade away from it, come back to it. You want to see that support price, right? We also got this one here. That's the same thing. That's inverse fair value gap too. But I'm looking at this one because this one is the one when we came down, swept out these two stages of liquidity. So that's your inversion fair value gap. So now we've created it. We've traded away from it, right? And not only did we create it, right? We created it, went all the way back to the low end of it, right? So we created it, repriced it, came all the way back to the low end of it and left it. Now that's a balanced price range, right? Created it, repriced it, trade all the way back to the opposite end of it. Remember, Michael talked about that before in the past. Whenever you create a fair value gap, once you reprice it, right, and then go all the way back to the opposite end of it and leave it, now it's a balanced price range. So now that's a balanced price range based off of how fair value gaps work. It's an inversion fair value gap based off of how the ICT concepts work. The first imbalance before coming and doing something, then getting a change in state delivery, right? And now we've traded away from it, and now we're coming back. So balanced price range, you want to see a support price. Inversion fair value gap, you want to see a support price, right? And then that also falls inside what? Our 5-minute order block that we want us on a 5-minute basis. You're looking at how price closes at 24,989.50, right? Because that's your 5-minute bullish order block. And that shouldn't be shown on the 5-minute time frame. That should only be shown on the 1 minute time frame. Right? Go back to your 5-minute bullish order block. Right? And then right now, what are we doing? We've come up on the 5-minute time frame. Right? We're still We wicked above it, but we're still showing respect for right there. That's your first imbalance as we're coming down, right? So now we closed above consequent encroachment, showing weakness. Wicked all the way up, right? Come back down, but we still haven't invalidated yet. It's showing weakness, right? So the weakness that is showing is in line with the lower time frame bullishness, okay? But now you're watching to see on a 5-minute time frame, how do we close in relations to that 5-minute candle? Understand your invalidation points when you're in trades. Okay? Okay? And with that, I will bid you all adieu. Thank you again for tuning in to Tim's Tidbits. This is tomorrow is the last tape reading session for Facilitation February. Tomorrow is the final day for Facilitation February. If you learned something this month, do me a favor, hit a like for the algorithm. If you're not subscribed to the channel, do me a favor, subscribe to the channel. We're coming back on Monday at 6 p.m. Eastern Standard Time to start back with the price action recap. Price action recap. What I'm going to do, we're still going to be doing the price action recap, but the way I want to do the price action recap, I want to do it in a more structured format where I have like an outline or a formula that I go through when I'm looking at the price action, because what I want to do, I want to create clips of content out of the live streams for the people who can't make it to the live streams, but they don't want to sit through an entire live stream to try to figure out what I'm talking about. So I want to start to organize the price action recaps. And then y'all remember when I used to do like gems from the live stream, when I would like just take out segments from the live stream. If I talked about a particular thing that was really good, I want to start breaking down my live streams into smaller bite-sized chunks, right? Like maybe 8 to 12 minute videos on, you know what I'm saying, certain portions of the live stream. So if it's like, if I'm going deep on a subject, I might clip that up. If I'm just covering like some about like the dealing range stuff, but I'm gonna write out the format of how I want to run the live stream, and so I can know, okay, these are the chunks I can cut out, and then this is the extra stuff if I throw some extra stuff in there, right? Just want to be able to create different content to make it more user friendly on the channel, instead of people just having to go back and look to be like, what happened in this live stream? All they say is live stream for this date, live stream for that date. It'll be something that you can actually go to and be like, oh, he was talking about this in this video, he was talking about that in that video. And then we still got the live interaction for y'all who want to pull up on the live and talk to your boy. Y'all know I like doing the live streams. But with that, if this was your first time tuning in, thank you. If not, thank you. And for those who don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That just mean big spot if you can't hablo Espanol. And until the next time I decide to get on Al Gore's internet and share my thoughts that with this thing, should I say, that they call price action, y'all be safe out here in the trading streets, man. Gone. Yeah.